You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody, that music means we are back. It is Thursday. It is 1:30 p.m. Central. It is 2:30 p.m. Eastern. Do you know what's going on in the world of futures options? Well, let's find out together, shall we? It is time once again for TWIFO, This Week in Futures Options. My name, of course, Mark Longo from the Options Insider Radio Network, your home now for 19 plus years of options podcast goodness. Make sure you're listening to the full network wherever you get your favorite podcasts. Otherwise, you're missing out on sister shows to this one, like the Futures Rundown yesterday, which, spoiler alert, we got into a little crude talk yesterday and probably going to be on the menu again today. Of course, if you want to check out everything live, join us for our live trading sessions earlier in the week like we had, as well as Options Oddities, as well as a whole bunch of other fun vol death matches. The optionsinsider.com/pro is the place to go. As we go around the horn, see who's joining us in the old CME Group hot seat. I'm pleased to welcome back on our old pal, beaming in from across the pond, Mr. Erik Norland, the chief economist over there at CME Group. Erik, welcome back to TWIFO, sir.
Thank you. Thank you so much for having me back.
We haven't chatted with you since November, early November of last year, so nothing much has happened in the market since then. Been a boring time,
It's
Erik.
all been very calm. It's all been super calm. Nothing to see here. Folks.
Nothing to see here at all, listeners. Well, let's see if we can drum up some excitement, because it is time, listeners, for the Movers and Shakers report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers report.
All right, everybody, welcome to the Movers and Shakers report, the portion of the show where we break down everything lighting it up to the light side and to the dark side over there at CME Group this week. And given all the price action leading into today and again today in a lot of the major asset classes, you might be forgiven for saying it's probably going to be a blood red week over there at CME. And the answer is there are more losers than winners this week. If you look at the full chart that we tweet out right before showtime, listeners, I'd say it's about 60-40 red over green. But that said, the largest percentage movers by a country mile are to the light side this week, listeners. I think you can probably guess which complex is causing all the hubbub out there. But Erik, you are our guest, sir. You get pride of place. Where do you want to start this week, to the light side or to the dark side, sir?
Oh, we have to start to the light side this week because that's where the biggest movers are.
All right, have at it, sir. The floor is yours.
All right. Well, it looks like heating oil is number one on the light side, going up. It looks like 38.5% so far this week. You have RBOB up 31.5%, crude oil up 23.5%. And then you have Brent not too far behind that. Then you have class 3 milk and soybean oil after that. And then rounding it out, you're getting some gains in natural gas, platinum, oats, Bitcoin, rough rice, wheat, all a bit smaller. All right, yeah. So look, on the dark side, you have the yen, the Nikkei yen futures down nearly 8%, palladium down around 6%, silver also down around 6%. And then you have materials down 4.5% and the Russell 2K down 4%.
I like your approach. Rather than building tension and suspense, sir, you go right for the jugular right at the beginning. You go right for number one. To each their own. Everyone who comes on here has their own approach here, Erik. But as I mentioned, listeners, you could probably guess which complex is lighting up the upside. And even though dairy's in there, dairy's not the one I was talking about, listeners. So I think we have to start things off in energy.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, listeners, you know where to go if you want to play along with the home game version of the show. CMEgroup.com/TWIFO, TWIFO, /TWIO should also work. That'll get you to our reports. If you don't have a CME account, you'll have to make one. It takes about 20 seconds. It's all free. And then once you're there, you can go into that drop down, listeners, in the asset class list. You're going to go down 3 slots to energy. And then we have to kick things off in the bell of the ball right now, which is crude oil, WTI. Coming into the start of the show, up almost 21% just since Monday. Almost at an 81 handle in WTI right now, 80.94 to be precise. Of course, if we go back to the end of our show last week, it's up 23.5%. Just wild times out here in crude oil this week. Erik, I want to get to all of your research and fun things in a second, but we have to sink our teeth into crude first. I'm sure you have some thoughts on this nigh on historic move, sir. What is catching your eye in the world of crude oil this week?
So, there's a couple things that catch my eye. The first thing is how small the move is by historical standards, given the magnitude of events in the Middle East. So far, you still have almost nothing transiting the Strait of Hormuz, which is where 20% of the world's crude oil transits on its way to market. So the fact that we're only up 21% tells me a couple things. It tells me, first of all, that traders don't think that this blockage in the Strait of Hormuz, or they're not pricing anyway, that this blockage in the Strait of Hormuz is going to be very long-lived. They seem to believe that the U.S. Navy will successfully help to escort ships through there, or the Iranians are going to run out of firepower, or that the war, for whatever reason, will come to a relatively quick end. Otherwise, it strikes me that the price of oil would be much, much higher than it is now. If you compare this to the size of past moves, when there have been disruptions in supply, like, say, during the 1973 Arab oil embargo, at that point, crude oil prices didn't rise 21%, they rose close to 300%, going from $3 to around $12 per barrel. Or at the time of the Iranian Revolution and Saddam Hussein's subsequent invasion of Iran from Iraq, that time oil prices also rose from maybe $12 or $14 up towards $40 per barrel. That would be like, in today's terms, if we went from $65 a barrel where we closed on Friday to maybe like $200 or $250 per barrel. So the fact that we're only at $81 per barrel strikes me as very, very interesting pricing on the part of the market.
Yes, I had a similar thought. I mean, it's hard to call anything 20+% move in a major asset like WTI. Hard to call it muted, but my thought was the same. I thought this seemed a little bit of a muted response given everything that we saw playing out over there. We had a guest on our Futures Rundown program yesterday. He believes the crude oil market these days is a very different beast than it was 5 or even 10 years ago. Coming into this event, we had oversupply from OPEC. He thought that was maybe weighing on it a little bit, so keeping this response kind of muted. As you said, people maybe believing that we could keep the straits open in spite of what Iran is doing, so maybe that also weighing on. And also the fact that Iran gave a gift to the crude markets by attacking the rest of their neighbors, so now the rest of OPEC has an incentive to maybe keep the spigot open out there. So do you feel all those factors are kind of combining to keep us, as you put it, Erik, somewhat muted?
Yeah, I think so. And then there's also the fact that inventory levels are at pretty solid levels around the world. And that's probably especially true in China, where inventory levels may be quite high. Um, so, the Chinese may not have an immediate need to buy more oil off of the market. Um, but that said, when you do look at the crude oil options market, the options have become pretty expensive. But what's interesting to me is when you look at the price of options trading below the money, the down variance, that's at 73% implied vol, where the options trading above the money, mainly the call options, those are trading around 117% implied vol. So you're looking at something like I guess that would be around a 45% gap between the cost of options to the downside for oil versus options to the upside. So the options market is definitely pricing some possibility still of an extreme upside move if this lasts longer than the market seems to be pricing currently.
Well, speaking of the options market, let's get to that now, listeners, because in spite of this move being potentially muted, that's of course subjective at the end of the day. The volume is not. 1.75 million contracts already on the tape, closing in on 2 million contracts. We have to go back a ways to find a week that's as hot as this out here. I'll have to go do some digging into the archives to see exactly when that was. Maybe in and around April of 2020, but outside of that, this is a very hot week out here in WTI options, listeners. We talked on the show last week with our good buddy Carly Garner about a lot of people loading up on upside in May and April. A spoiler alert, those trades obviously worked out pretty well. We'll get to some of the flow from this week in a second, but first, let's pay off some of the flow from last week. Last week, we talked about people loading up on the April 80-90 call spread. Like I said, coming into the show right now, that front future at about an 81, and we obviously got higher intra-week on WTI. So that spread was obviously looking pretty good. People didn't wait that long to take that off. They took it off immediately on Monday, listeners, for almost about 450% return. They took it off for about $2.40 after paying about 54 cents for it on the show on Thursday. So that one looking pretty good. And again, people didn't wait. They were hitting the bid on Monday, which again maybe gets back to what Erik was saying, that folks are maybe thinking this won't be as dramatic or as long-lived as previous spikes were. We also saw the May 80s and 85s trading straight up last week. Those worked out pretty well. Obviously, the May 80s went up. They were about $2. They traded for $2.05 on the show last week. They closed them again on Monday. We're not waiting around at all, not messing around. They took the bid and they hit it on Monday for $3.45. Those are up about 70%. Obviously, if you waited a little longer in the week, you could have gotten even better levels, but they didn't wait. They got out on Monday. Also on Monday, folks were bailing on that 80-85 call spread that went up for 78 cents as well. So people not waiting around. They were taking their bid and they were getting the heck out of Dodge. Fast forward to today. What's lighting up this explosive crude market today? Well, a whole bunch of things. Listen, like I said, already almost 2 million contracts on the tape. The most active cycle is actually the April cycle. Has 12 days to go. That's where about 38% of the flow is going up right now. As Erik was just laying down, the vol out there is juicy, to put it mildly. The April vol is at a 94 and a third, up 29 points just since Monday. So again, that vol definitely looking spicy, and so is the call wing. The calls were 14.7% bid last week, you know what? They're still bid. They're at 17.2% bid this week. So vol has exploded, and that call wing still increasing in bid. So those calls are getting juicy. The puts last week, 8.8% cheap. This week, about 13.5% discounted. So a market bid to the upside still in the calls, and that's probably to be expected. And we see the 80 calls in May right now, or it's 80 calls across the board are the hot contract. In the April cycle, they've done about 62,000 contracts already this week, which again, the big day was Monday, 21,000. Folks getting out of Dodge on some on Monday. We also have the 80 calls in May. Again, we talked about these last week. These are also pretty active, but these are the ones where folks were hitting the bid on aggressively on Monday. They traded 33, almost 34,000 of them on Monday. And again, the May 80 calls are right now the number one most active contract in WTI with nearly 70,000 contracts on the tape. We also saw the 85s changing hands this week, 35,000 times. Folks bailing with about 12, 13,000 of those on Monday. We also saw, again, that 80-85 call spread trading as well. The 80s trading again on Wednesday, 15, almost 16,000 times. So it could potentially have been some opening paper there. Second half of the week, maybe looking for a little bit of another leg up. But either way, those contracts that were lighting it up last week, lighting it up again this week. If you want some weird flow, maybe unanticipated flow, if you like the pars are still trading, as you might expect. The pars in December trading 19, almost 20,000 times today. The big day was actually Tuesday, 11,000 of them. Looks like paper was actually bailing on them then. Either that or it was a 99 par vertical that went up about 10,000 times. That's a very tight vertical, but we have seen weirder things. And speaking of weird things, listeners, what caught my eye this week, not a strike you thought I was probably going to talk about this week, but one of the more active strikes in WTI this week are the June 30 puts. Yes, 30 puts, trading about 25,000 times this week. If you're wondering, that June future, a little bit lower, 75.5, but not that much lower to make the 30 puts sound much better. And these all traded on Monday about 25,000 times. It looks like it was actually, do a little bit of digging, it was actually part of a put 1x2, the 35-30 put 1x2 paper. Looks like they were buying one, selling two for prices of around 4-cent credit. So wild stuff out here in the world of crude. Erik, did you want to touch on anything else in the energy complex, or should we keep on rolling some other things, sir?
Well, just very briefly in energy, there's been a tremendous spike in natural gas prices across Europe and Asia because the Qataris have shut down their export facility. So this could mean very, very strong demand going forward for U.S. LNG exports, which might keep a little bit of a bid there in Henry Hub. But that'd be my last comment on the energy sector.
Yeah, nat gas, very interesting product as well. Obviously, very much split between the U.S. side and then what's going on overseas. And so interesting stuff. We'll probably come back to nat gas on another show. But Erik's been busy cranking it away at a variety of research since the last time we chatted. And you know what, Erik? Since the last time you joined us in November, outside of this past week, the narrative in the world of futures and futures options has been all metals all the time. So I think we have to go there next.
Werewolves beware. It's time to explore the options activity in silver, gold, and other shiny things. It's time to talk metals.
All right, everybody, welcome to the metals component of the show. Pop out of that energy section. You're going to go all the way down to the bottom of our asset class list. It is an alpha order list. And then you're going to go to metals. From there, you're going to go to precious, and then we could pick our poison. Gold, silver, all of them have been fairly active right now. Obviously, the trend in the markets over the last, since November, since you joined us, has been a lot of upside, a little bit of downside, then a lot more upside in the metals. But interesting enough, also seeing some interesting price action in the metals this week, on a week where in the past we've seen things like gold and silver serve as a little bit of flights to quality asset. We're seeing those take hits this week as well. So folks are kind of bailing on all those assets this week. So interesting price action. I'm curious your thoughts on the wild run up we've seen in the shiny stuff since your last appearance. Maybe some of the interesting back and forth we're seeing this week. And also, you have some interesting research on this topic as well about the relative value and how that's key to understanding precious metals, sir. So break it all down for our listeners.
Yeah, so I think when it comes to why are metals not performing so well this week, I think part of it may have to do with the fact that we're having a global surge in bond yields. U.S. Treasury yields have been rising, but it's even more pronounced in other markets. So you have to remember things like gold and silver compete for investment with things like the dollar and the euro. And when the dollar and the euro and other currencies are expected to pay higher interest rates, it makes some of these metals look a little bit less attractive. Now, as you rightly point out, that the prices are still vastly higher than they were in November when we last spoke. And so I think there's still a number of reasons for that. First, geopolitical risk, which we, of course, saw come to fruition over the weekend. Secondly, there is the fact that inflation is running above target in almost every major country in the world, which is something we talked about in November. And third, despite the fact that inflation is running above target, almost every central bank in the world, including the Federal Reserve, is either cutting rates or contemplating cutting interest rates further, with very few exceptions. And then lastly, you have just gigantic budget deficits in almost every major country in the United States, France, Britain, Germany, Japan, China, Brazil, Mexico, all running gigantic budget deficits. So I think you have a lot of people looking at this and saying to themselves, well, why should we be investing in fiat currencies, which central banks can print, when we could hold a hard asset that central banks cannot create?
Let's see what folks are creating out there on the options front this week. And you know what, Eric, if you had just shown me these volume numbers apropos of nothing else and said, is it a wild week out here in the precious metals, my answer would have been no. It's about normal volume levels compared to certainly what we're seeing out there on the energy front. You know, we see gold on a typical week somewhere around 250,000 contracts, and it's about 220 right now. Silver, 20, 25,000 contracts, maybe 30,000 on a decent week, and about 28,000 right now. So neither of the kings of the metals right now are really lighting up the tape, which is kind of interesting. We haven't talked gold in a little bit here on the show. It's been mostly silver, listeners. Let's go out to a little bit of gold right now. Like we said, about 217,000 contracts on the tape. The lion's share of that, 41%, going up in the April contract that has 21 days to go. So we will hang out there. That front future at about a 50.75 right now, off about 173 handles, or about 3.3%. Since Monday, obviously, if you go back to the end of our show last week, it's a very different number. And in terms of the most active contract out here in gold, traditionally it's long term, it's December upside, something along those lines, maybe call verticals or 1x2s, all kinds of funky ratios. This time it's upside, but it's not quite as long term. It's the April 5,500 calls, going up about 5,000 times this week. The big day being actually on Tuesday, about 1,500 on Tuesday, about 1,400 on Monday. So kind of trading back and forth on Monday and Tuesday, 700 and change on Wednesday, about 1,400 today. So pretty active today. It looks like the 5,400s also pretty active. The big day for those, 2,500 on Monday. Looks like paper bailing on those. 1,500 on Tuesday, and not much the rest of the week. So again, 5,500, 5,400. These were levels we were threatening not too long ago. Moving back away from those now, and we're seeing, it looks like paper closing out of that near-term gold upside, perhaps as a result. Let's do a little bit of other dig and see if we can find some other interesting and or exotic paper up here. How about the 6,000s, the pars beyond 5,000? Let's go up to the 6,000 calls. They traded both in May and in June. 4,300 times in May with about 53 days to go. 2,700 times in June with about 82 days to go. So looks like paper was closing on the May. Maybe we'll have to take a look, maybe see if they're opening in June, maybe a little bit of a roll. But 6,000, if you had said that to us back the last time Erik was on, I think he probably would have laughed. Erik, if I had told you we'd be talking about 6,000 in gold on your last appearance, sir, you probably would have laughed and hung up on me, would you not?
Well, I certainly would have been surprised if we would have been talking about it this quickly. I mean, it's kind of inevitable, probably, that it goes there someday. I mean, for example, a century ago, $23 bought you an ounce of gold. Now it's 5,000. So the dollar's lost 99.5% of its value versus gold in the last century. So the idea that eventually it would go to 6,000 wouldn't have surprised me. But the fact that we're talking about it already at the beginning of March is pretty amazing.
Pretty amazing indeed. I took a quick look, and these June 6,000 puts, they were also closing those on Monday. So it wasn't a roll. It looks like paper just giving up the ghost on the par strike, 6,000 strike, at least for now. Obviously, we'll keep an eye on gold. If it starts rallying again, then of course might have to come back to the strike. As Erik says, it is inevitable, it seems like, at this point. You know what else is inevitable? Whenever you're talking about gold, it's the flip side of that narrative. It's the digital side. So it's time to talk a little bit of crypto.
It's time to explore the volatile world of Bitcoin, Ether, and more. It's time to talk about crypto.
All right, everybody, welcome to the wild world of crypto. Go into that drop down. You're going to pop out of metals. You're going to go all the way up to the second asset class from the top listeners to cryptocurrency. Then from there, obviously, an embarrassment of choices. There's CME offering a lot of futures now on the crypto side: Bitcoin, ETH, Solana, and XRP. So 4 of the top ones to choose from in the big version and in the micro as well, which is still hilarious to me, a micro XRP. But that's a conversation for another day. Erik, so many people have been obsessed with the metals these days. The conversation has come back up. I thought we had kind of settled this a year or two ago, but it has been hot again. This whole notion of Bitcoin as digital gold. I know you've done some research on this lately. Where do you stand now on this whole Bitcoin as digital gold hypothesis, sir?
So I don't buy it for a very simple reason. If you look at the day-to-day correlation between Bitcoin and gold, it's very close to zero. And it's been very close to zero for most of Bitcoin's life. There have been brief exceptions, like during the pandemic, when the central bank in the US, the Federal Reserve, created trillions of dollars of QE assets. They briefly became positively correlated. But aside from those brief exceptions, the correlation is usually zero. Um, and so the last year has been no exception. There simply is no day-to-day relationship between what Bitcoin does and what gold does.
I heard an argument recently, because I'm with you. I've always been kind of skeptical of that notion. I heard an argument recently that you could look at it through the lens of gold is the marquee asset of the metals complex, and maybe some might argue of the economy, and Bitcoin is that for the crypto space. So therefore, it's not really from a correlation perspective. It's more from a perhaps perception perspective. What do you think of that, Erik?
Well, I definitely agree that gold is the driver of the precious metal space. Like silver, for example, responds a lot to what happens in gold. It's not the only driver of silver, but silver is sort of like the high beta version of gold. And the same thing with Bitcoin. Bitcoin dominates the cryptocurrency space. That does not, however, mean that Bitcoin and gold somehow have a strong relationship between the two of them.
Speaking of price action, I have been a little bit intrigued by the price action in crypto this week. We came into this week and we saw a lot of action, obviously, in places like crude. We just talked about it, and energy. A lot of action in equity volatility. We talked about a lot of surprising downside in the metals. Where we saw perhaps for some surprising upside was in the crypto complex. In fact, until today, we're selling off today, but until today, it seemed like this conflict was driving a fair amount of flow to the upside in Bitcoin and the other major crypto assets. What are your thoughts about some of the near-term price action we've been seeing in crypto this week, Erik?
Well, it's always a little hard to say because it's so volatile. I mean, Bitcoin, for example, has, I would say, around 2.5 times the level of volatility that we see in the gold market. So you have to remember that the upside we've seen in crypto earlier this week came after a couple stagnant weeks. And before that, we had just a brutal, brutal sell-off in crypto towards the middle of February. So even with the upside we saw earlier this week, it's still very, very far away from the levels it was at the beginning of the year. So it may be that there was some bargain hunting. I don't really know. It's an interesting phenomenon. I'm not sure exactly why prices rose earlier this week.
An interesting phenomenon is a good way to put it, at the very least out here. Is it interesting enough to drive some volume? The answer this week is it's pretty much looking right around average, about 1,100 contracts going up in the big Bitcoin options over there at CME. If you're wondering, we're hanging out a little bit north of the 70,000 level right now, 71,270. Even with today's sell-off, still up about 8% or about 5,400 handles from where we were on Monday. So again, so far this week, it has been net upside for Bitcoin and the major crypto assets. If you're wondering what is the hot trade out there in CME Bitcoin option, looks like it's an upside vertical trading today. It's the 80,000, 90,000 call vertical trading 100 times out there today. I don't have prices, listeners, but perhaps you think these are, by the way, this is April, so it has looks like about 50 days to go. So you're getting a little bit of duration with this one as well. So 50 days, can we get back above the 80,000 strike? Perhaps you like that vertical as well, listeners. But we have to keep on rolling. A lot of research to squeeze onto the show whenever Erik joins us. So our next stop, listeners, is the rates complex.
The Fed, the yield curve, inflation fears. How are they impacting options activity and volatility in your favorite interest rate products? Let's find out as we explore the world of rates.
All right, everybody, welcome to the wonderful world of rates out there. You're going to go pop out of that crypto complex. You're going to go down one slot from the bottom to interest rates. Product family, you're going to go U.S. rates. Then from there, we have an embarrassment of choices. Again, we can go 5-year, 2-year, probably 10 years where we tend to settle out. But we'll let Erik drive the boat at the end of the day because he has been crunching the numbers, in particular, listeners, about U.S. credit spreads. Are they potentially underselling the risk out there in the market? Erik, what have you noticed out here in the world of credit spreads, sir?
So credit spreads in the U.S. have almost never been narrower than they are today. So they're basically corporate bonds, especially high yield bonds, are about as expensive relative to treasuries as they have ever been in history. Which strikes me as odd given that there are so many problems cropping up in the private credit market. In the private credit market, we're starting to hear more and more stories about bankruptcies, about defaults, but for some reason, this is not spilling over into the public markets upon which our futures are based. I think it really depends a lot on the direction of the economy, the fact that the Federal Reserve is easing policy, the fact that we're still running a big budget deficit with all the tax cuts we had last year and all of the government spending that's still ongoing, may be supporting the economy. And that may mean that there's enough cash flows to help everybody who's borrowed money in the case of these high yield bonds to keep reimbursing their creditors for the time being. But this could be a very sensitive area if we get an economic slowdown as a result of, say, higher oil prices or potentially a correction in the stock market. It's going to be a very interesting area to watch.
You know, you're right. It seemed like a week ago we were talking, obviously, on this show about WTI and some of the potential for upside if there was action over the weekend. But you're right, behind the scenes, and there was a lurking narrative in the rates complex and in equities of these swirling risks around private credit and what's going on there. It seems like the thunder for that was stolen over the weekend for obvious reasons. Once the bombs start going off, that tends to steal all the headlines. But you're right, there is definitely some concern and some worry being priced in here. Let's just look at the 10-year, for example, listeners. It's the bellwether. It's where a lot of you, I know, like to hang your hats when you're trading out here on the yield curve. And these are some volume numbers, Erik, that are almost hard to process. How do you analyze 5.5 million contracts worth of flow? It's a challenging prospect, to say the least. But I will say, getting back to the concerns about what's going on the credit side, we might see some of that playing out here. We're seeing the lion's share of the flow, 41%, going up in the April contract. Listen, it has 22 days to go. And again, that's 41% of 5.5 million contracts. So we are talking some serious business out here this week, listeners. And the lion's share of that not going to the upside, listeners. We're going to the downside. In particular, it was the 112 puts expiring in April. So again, 22 days to go. Changing hands already 272,000 times. If you're wondering, that's more than, we just talked about gold, that's more than gold and silver, and probably pick a few others you want, platinum, and throw them in there on top, maybe even copper, add them all in there together, and this one put in the 10 years trading more than all of them combined. So absolutely wild flow, 272,000 contracts. The big day was Monday, actually. So coming in out of the weekend, that's where we saw a lot of action, 124,000 of those changing hands on Monday alone. That was opening flow. 60,000 on Tuesday. Maybe some folks getting the heck out of Dodge already, so closing slightly on Tuesday. And then about 40,000 on Wednesday, 47,000 today. I mean, these numbers are absolutely astronomical. But that's a little bit too far out of the money for you. How about the 112 half puts? They've traded 215,000 times, including the big day again on Monday, 75,000. So there might be some vertical flow going there as they were both opening. So it could be a 112 half, 112 put vertical going up there as well. 50-odd thousand on Tuesday, eerily similar paper. So it does look like we have some vertical action going on there, opening on Monday, closing on Tuesday, and then 40,000 each again on Wednesday. So it does seem like these two strikes are trading locked at the hip, even though the total flow on the 112 puts is more. So maybe a bit of a ratio going up out there. Erik, April, so not that far out, only 22 days to go, but in the world of 0 day, it's an eternity these days. And the 112 strike, which, by the way, is pretty much where we're hanging out right now in that future. That is pretty much the at-the-money strike. So, Erik, does that tell you maybe some folks are kind of picking up what you're putting down here, that they're a little bit concerned going out in the future here?
Yeah, it wouldn't surprise me, because one of the things that fascinates me in this market is that the interest rate market story about where the economy is going is completely incoherent with the metals market story. Since the beginning of last year, long-term bond yields are basically flat. They really haven't moved. Even fives, 10s, 30s, they're all roughly the same yield that they have been over the last, say, 15 months. Meanwhile, gold prices are up 95%. Silver prices, even despite their recent correction, are something like 175%. So either the precious metals markets have this right, and we're about to get hit by a massive wave of inflation, in which case treasuries need to sell off, or the treasury markets have it right. Inflation is not really that big of a concern, and the precious metals have exaggerated the size of the move. So when I look at these two markets, I see something very incoherent. I see one market that's terribly afraid of inflation and the other one that doesn't care, and they can't both be right.
I'm glad you brought that up, because to me, the metals have been screaming incoherent signals for quite a while. We were having this debate towards end of Q3, beginning of Q4 last year, when the metals were really beginning their upside move and equity vol was relatively placid by comparison. And we thought even then, these are two very different signals that the market is sending us. Now you add rates into that mix, and you're right. Two very different polar opposite stories out here. I'm not sure who to believe, Erik. Who do we believe at the end of the day? Do we believe the metals, or do we believe the rates? But we are kind of coming up against it. But I'll let you choose as our guest, Erik. We've already touched on rates. We've already touched on metals. We've touched on crypto. We've talked about the belle of the ball right now, which is energy. Where should we go next? Or which other product complex is screaming out to you right now?
Well, the one that's screaming out to me is the one that's not really screaming, which is equities.
All right. To the equities we go.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
I had a feeling you might go there, Erik, so I already had it pulled up on my screen. Listeners, of course, if you want to go there, pop out of the rates. You're going to go up 2 slots to equity indexes, and then there's, again, you're going to go U.S. Index E-mini. Once again, an embarrassment of riches. S&P, NASDAQ, RUT, all sorts of stories being told, small caps. Erik, what is catching your eye in the equities right now, sir?
What catches my eye in the equities is how calm everything is. I mean, sure, the equity markets have sold off maybe a little bit, but you have kind of at the money options in the S&P 500 trading at maybe 22, 23% implied vol, something like that. It's really just very, very low. It's very calm. And it strikes me as interesting, as you pointed out a second ago, that you have this contrast also between low or relatively low. It's not ultra low, relatively low implied volatility in equities versus ultra high implied volatility in the energy and metals markets. So, I mean, it makes me look at this and think, well, which is it? Is the world absolutely full of risk that's abnormally high in the case of energy and metals, or is it not? And it's kind of hard to reconcile this. It's kind of like either oil and metals options markets need to calm down and lower their implied volatility. Maybe equity markets need to ramp up theirs. I'm not saying that that's a guarantee that will happen, but it just looks like an interesting discrepancy.
Let's dive into a little bit of that equity action right now. And spoiler alert, it's an active week, already over 4 million contracts going up in the E-mini. But Erik, where I want to set my sights is another, you mentioned it, another area of the equity markets that is coming under some intense pressure today. This is small caps. This narrative has been going on for a while now that we're seeing a rotation out of large caps and into the small caps. As a result, even when the S&P was struggling and flat, small caps were still up 4, 5, 6% for the year. Given a good chunk of that back today, it was off at 1.275%. I should mention, listeners, we are recording this on a pretty blood red day in the equities, even if we are, it looks like maybe rebounding a little bit off the lows here right now. We'll see if we can keep the red on the screen, or who knows. But right now, small caps taking a beating, still up on the year, but only up a little bit less than 3%, about 2.8%. So kind of getting their year-to-date gains cut in half. Erik, what are your thoughts on this much ballyhooed rotation we're supposedly seeing out here, out of large caps into small caps? Are you seeing that as well in your research? You think it's maybe overdone?
Well, look, I mean, the Russell 2000 has been underperforming the S&P 500 really since the year 2021. It's lost a lot of value relative to small caps, have lost a lot of value relative to large caps. Now, you're right, there was a sort of counter trend move in that over the last few months where small caps looked like they were starting to rebound. But whether it's a real true turning point, I think is too early to say. There's been a long-standing history of small caps outperforming large caps during recessions, during easing cycles, and then large caps outperforming during tightening cycles. This might be temporary. It might simply be that the market's saying, okay, well, oil prices are soaring. That's going to put upward pressure on inflation. So therefore, bond yields should be going higher. Maybe the central banks can't cut interest rates as much because rates are rising. That's not a great story for small caps, which tend to be more interest sensitive than large caps. But we'll have to see how things work out.
Well, things are certainly working out pretty well in terms of volume out there in the small caps right now at CME. Usually this time of the show, on a quiet show, we'll see about 20, maybe 25,000 contracts, already 60,000 contracts on the tape so far this week. So looks like it's a pretty active week out here. And I'm trying to dig for some prices for you listeners, because what's been always interesting about small caps as opposed to all the other equity indexes out there. If I go pull up the S&P right now, we have 4 million contracts. A good chunk of that, upwards of 40 to 50% of that, will be in zero-day contracts from today and earlier this week. It's same thing in the NASDAQ. Small caps, though, play by their own rules of engagement, and it's not always zero-day, and that is the case again right now. In fact, the leading trade out here with about 60,000 contracts, we're seeing 6,000 contracts of it, so 10% going up in this end of month March. So it has 26 days to go, listeners. Looks like a 2,500 2,400 put spread going up pretty much as we're talking, 3,000 times. So obviously 6,000 contracts total. The OI, there's no OI to speak of. So this is all opening flow out here today. I was trying to find some prices for you. I do not see any prices on these. I'll have to do a little bit more digging after the show. But by the way, as we're coming into the start of the show, 25.67 in the small cap. So they're off again about 2.5% right now on the week. So that 2,500 strike, not that far out of the money. Another day like today, listeners, we could easily be at that level. So perhaps that intrigues you, 2,500, 2,400. They're giving you some room to work, about 26 days. So perhaps that one intrigues you out here. We're also seeing outside of that print, we are also seeing 26 quarter calls with about 4 days to go. They're also pretty active out here this week. Again, it looks like that's today. All this flow is today. Small caps lighting it up today, listeners. They've traded 1,735 contracts this week, 1,709 of them going up today. So that is opening flow today on the 26 quarter calls. Again, these are expiring in 4 days. So not finding prices on those, listeners. But either way, some interesting stuff out here. You have a out of the money put spread with 22 days to go and some decently out of the money calls going up with about 4 days to go that are lighting up the tape out here in small caps. I'm curious what you think as well, listeners. Has this rotation from large caps to small caps, has that been overdone? Is that overblown? Or maybe are we going to see a little bit more action in that to come? Hit us up. Let us know. All right, Erik, that music means we've come to the end of another sojourn through the world of all things futures options. I appreciate you taking some time and beaming in from across the pond. But before we go, sir, we got a couple of minutes here at the end. If there's any complexes we haven't hit on, maybe you have some cutting edge breaking research you want to share with the folks here on the show, either way, have at it, sir. The floor is yours.
Well, I have a paper out on the yen recently, and I think the yen is an interesting one to talk about too, since we haven't touched on currencies. The yen has been a very, very weak currency for the last 12 or 13 years. Over the last, say, 15 months or so, since the beginning of last year, it has also been the world's weakest currency. It's the only major currency that has dropped versus the US dollar. All of the other currencies are stronger. And so in my paper, we talk a lot about how the Japanese bond market has been collapsing, how Japan has debt levels that are twice as high as the United States. So as those bond yields rise in Japan, it's going to dramatically increase their government's cost of funding. The new prime minister is going to try to stimulate the economy. How? By expanding the budget deficit, by doubling the deficit, by both cutting some consumption taxes as well as vastly expanding government spending on things like the military. This is going to be a very, very interesting currency to continue to watch. It's been interesting among currencies for a very long time.
There you go, listeners. Yet more cutting edge research from Erik and the crew over there at CME. And Erik, if they want to check out your research on the yen and Japan or anything else we talked about on the show today, crypto rates, where should they go? What should they do, sir?
All of the research is on our website at cmegroup.com, and you just have to scroll to the bottom of the website or towards the bottom, maybe not even all the way to the bottom, and you'll see our research as well as a bunch of other content out there.
There you go. Check it out, listeners. cmegroup.com. Scroll on down. That's the only other place I'll allow you to go before you go to our reports over there. The TWIFO report's always cool, but if you want to stop and check out what Erik's got cooking over there in the team first, we're okay with that. Just make sure you check out the TWIFO reports afterwards. A lot of great stuff over there. cmegroup.com, the place to go to kick the tires and light the fires. We have to get on out of here. Back again after the closing bell today to wrap things up. A wild day in the options market. I have a feeling the hot options report today is going to be similarly wild. Stay tuned for that. Yet another reason why you should be subscribed to the full network. And then, of course, speaking of wild, I think we're going to have a lot to talk about on Volatility Views tomorrow. I'll be joined by our good buddies, Mr. Matt Amberson, Dr. Vix, as well, all kinds of fun special guests. A lot of vol popping off to talk about. So make sure you're checking out Volatility Views tomorrow. Then, of course, we're back next week, kicking things off on Monday with the option block until we're back here again next Thursday, another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.